It's Sunday, the 11th of August 2019. It's been a tremendous couple of weeks for the gold price, uh, back up to 5-year highs or 6-year highs actually, and pushing at this $1,500 level. It's If you remember the last video, I'd talked about there was potential downside risk. I think I published that video on the 28th of July, and I was really looking at that Fed decision on interest rates, which everyone was sort of really looking for a quarter or a half point cut, and I thought potentially if the quarter point came in, it could disappoint a few, and that might be negative for the gold market. And I was looking for a little bit of a correction, and it did happen like that for that one day, just for the day after the Fed decision. Saw gold sort of pull back a little bit toward 1410 there, but then we've had this China news, obviously, and that's with the trade war sort of going to another gear, and that's really rocketed the market higher, the gold market, and broken out of this nice little sort of flag that had formed, and now we've headed for that 15. I think the level I talked about previously was this 1525 was my target after if it broke out of this little flag. The reason for that is this. In 2013, that was the breakdown point. If anyone was watching the gold market back then, that was a tremendous sell-off. I think about 15 or 20% in less than a week, and that at the time. I think it was the highest volume day ever in the gold market by some distance, and that was created this kind of air pocket on the chart. So there wasn't a lot of resistance between that sort of 1450 and 1500, and we've seen that move. It hit the gold price move toward that 1525 level, but I think you'll see that as a bit of a resistance level. So I'm pausing here. I think there's but the backdrop is obviously still very positive for the gold market, with economic sort of performance almost everywhere in the world starting to fall over a little bit, and obviously trade war tensions aren't. We're sort of reaching a phase now where this is going to be prolonged and not resolved as maybe the market had expected. And you can see there that level, that 1525, was the support level for about 2 years in 2011 to 2013 until it really cracked. So I expect that to be, that's one thing about the gold market. It does sort of observe these technical levels quite well, and I'd expect that will be if we're able to get to 1525, and the market does seem to be sort of rolling over ever so slightly the last couple of days. I think that's a little bit of a pause, but potentially a time to maybe move to some other gold positions. Or I've been selling a few positions just to take profits, waiting for that pullback, and I expect a few other people have been doing the same. So that's sort of the level I'm looking at on the long-term chart. Obviously the Australian dollar's really cracked as well. I talked about it in the last video as well about that 68.2 was the 10-year support level, and I looking at the old some of the old price action from 2009. Again, there was kind of this air pocket below 68, all the way down to about 66, and I was thinking that if we could break that 68.2, it could be quite a steep fall. And it did. This pretty bearish chart here was about 10 down days in a row, sort of relentless selling. Broke down, and it had a real big spike down of about a whole cent on, or maybe a half a cent there on last week. But it's recovered a little here, but I think you could probably expect that to act as a little bit of a resistance level now. And I've seen a few articles come out, and it's really like you can't believe this is actually happening. They're talking about the possibility of zero rates and quantitative easing in Australia, and this is just going to trash the currency. And I think I mentioned this maybe 6 months ago that this was being sort of talked about, and it starts out as sort of fantasy, but then it gradually is becoming reality. And I think if this actually happens, you could see anything on this on the Australian dollar, especially if the Chinese economy were to falter as well. And we've seen the iron ore price really come off hard in the last couple of days, or last week. I think it's down maybe $30 or sort of 25% in the space of a week. So this is that's a pretty bearish sign. And I think this currency is going to. I think they will probably do QE, because this is an opinion that it's kind of worked elsewhere. So now they've got the green light from other countries that it's that's what they'll go to, even though it's clearly hasn't worked in a lot of other places, and we're sort of reaching the end of the road in Europe and America where they've tried these things. But anyway, that's the sort of in the bubble of central bankers. That's how they kind of think. So I can see them doing that, and it may be sooner than you think. Anyway, so that's really pushed the Australian dollar gold price up to 2200, which is just unbelievable here. It's got another leg up from that little flag breakout at 2060 there. I think that was about when I published the last video on the 28th of July. It broke out soon after that, and it's gone above my target. I was looking for this sort of 2150 area as a bit of as a target zone, and it's just soared above that with the currency falling through the floor and the gold price getting that US dollar gold price getting that tailwind as well. So it's hard to believe it's got to 2200 so quickly. So could keep going, but I'm a little bit cautious in some of the Australian gold miner names, Australian dollar gold based names, and I'll talk about that in the other video I put up today. The S&P 500 obviously rolled over as well. That was one of the other things I thought possible out of that rate cut. If it was a quarter point, the market might see it as not enough, and use that as a bit of an opportunity to roll over, and that's kind of what's happened. And then it's obviously the China trade stuff's really pushed it down further after that. So it's a pretty bearish setup. We're getting these sort of sharp drops again. I think if this were to rally back up to sort of this 29.50 maybe, that sort of area, it looks like it could be a bit of that would probably be a good short sale there on the index. But I'm sort of I'm waiting gradually for that sentiment to roll over, and it's we've seen these big falls a couple of times in the last 18 months, so I wouldn't be surprised to see another one if it rallies up a little bit further and to resume the fall here. As I said, I don't think this China stuff's going to be resolved anytime soon, and the economic data is gradually weakening. The ASX 200's also pretty interesting. I showed this chart last time. I've had these this long-term trend drawn on here for a few years now. It did crack the all-time high a couple of weeks ago above that 68.50 level intraday, and that's sort of within this longer-term trend, also tagging near the top of that trend, and then it's obviously cracked down very hard in a couple of days there, trying to rally up, but pretty anemic so far. And I did like, if you look back on the 2007 sort of price action, looking a little bit similar at the moment. Obviously, that was sort of the 2006-7 move there was extremely impulsive, sort of 1,500 points put on there in about 12 months. And then it sort of fell over. I think this is when some of the Bear Stearns stuff was really starting to, people starting to question subprime in America. And then it had one final rally up to the top. And I'm sort of feeling like we're in a little bit of a similar situation here. Although the rally here, I think, was kind of last year's price action, a little bit more grinding. But this move in the last 6 months is kind of similar to what happened in the last 3 or 4 months of the 2007 bull market. And if you actually look at this here, it's a kind of a near perfect repeat of that range. It's been not quite as steep of a move, but it's rallied up very hard there and then sort of cracked down. So again, I think if this were to rally up a little bit and maybe fail at this sort of 66.50 zone around here, that could be a bit of a short opportunity as well. There's not a lot of positive signs for the ASX at the moment, and it's unclear to me how well the Australian market would rally if QE and these other, if lower interest rates were to come in and QE was to come in as well. I mean, lower interest rates are already priced into the market. I think there's probably another half a point already priced in, so there's not a lot more juice from that. And QE, it's kind of the confidence that would instill in the market. I'm not sure if it would actually, people would start to question the narrative that this can really push the stock market a lot higher. So that's sort of interesting, and that's the sort of longer term stuff I'm watching as well. But I think ASX 200's kind of cracked here, and some of the headwinds are now. Like I said, that iron ore price, some of the mining stocks are not getting the bid that they have. So BHP and Rio and Fortescue are starting to roll over a little, and some of the base metals as well. So they're the sort of bigger charts. Some of the gold stock indices, the GDX and the GDXJ that I sort of do updates on every so often. GDX has obviously had a tremendous move up about 50% now from May, and still not up to those 2016 highs, but getting there, getting close. GDXJ is probably also a similar type of move, about 50% off its recent run, but further below the highs of 2016. So these indices probably due for a bit of a pullback here, but with that gold price staying high and being supported by sort of negative interest rates on a lot of bonds, that's making gold an attractive investment now, and the miners are still catching up a little bit. So, and I'll talk about some of those specific mining stocks. I think it's really filtering down to sort of not even the GDXJ level. I mean, GDXJ is for producing companies above sort of generally above $200 million US market cap. So it's now filtered down to the tier below that, and that's where these things sort of cascade down the tiers from the producers to the juniors, and then to the exploration sort of stocks and the developers. So this is really the junior producers in the GDXJ, but it's still pretty positive on the mining stocks here, and I think they might have a bit of catch up to do, particularly in the smaller developers and explorers. So that's what I'm watching at the moment. As I said, I think gold here potentially due for a little bit of a pullback. I know that the amount of interest in people people asking me a few questions. I can see there's a little bit of short-term euphoria here on a bigger scale. I think there's this is only the start of, we're not even sort of the end of the beginning here on the macro level, and haven't reached recession, and central banks haven't really gone to a next level of policy, but it's not hard to see how that would unfold, and that's got very likely to be positive for the gold market, I think. So the mainstream might just starting to be aware of gold, but it's not euphoria on that mainstream level. But amongst the gold bulls who are always there, I can see a little bit of a short-term peak here, particularly in some of the sort of medium cap mining stocks that might have gone up 50 to 100% in the last 6 weeks, which is pretty much most of them on the ASX. I just need a bit of caution here, and I'll talk about that more in the other video I published today. Thanks.